We have another important guest at the table this morning. Paul Tudor Jones is here to talk markets, rates, the Fed, and everything happening in the Middle East right now. He's the founder and CIO of Tudor Investments, founder, of course, of the Robin Hood Foundation. And it's great to see you here, especially at a moment where we're all trying to make sense of a lot of senseless things. But let's start with Israel in terms of thinking about the geopolitical implications of this, but also how you think it's going to long-term and short-term affect markets.
Well, I think Israel, obviously it's a huge tragedy, but you have to put it in a larger geopolitical context, which is we now have possibly 3 theaters where we're going to have geopolitical challenges. We've got the Middle East and Israel, obviously the Ukraine and Russia, and then at some point down the road, Taiwan and China. So it's a really, I would say, certainly since I was born, it might be the most threatening and challenging geopolitical environment that I've ever seen, because you have 4 nuclear powers, 3 of whom are led by sociopaths, and that would be China, Russia, and North Korea. Obviously, those leaders have zero accountability, responsibility to anyone but themselves, and they have not an ounce of humanity in their bones, because they regularly disappear both their friends and their enemies. And then the 4th, Iran, is led by someone who thinks God is talking to him and has avowedly said that they want to remove from this earth a nation state with probably the most brilliant people ever assembled within a national boundary. So it's a really challenging environment. If you think about it too much, I want my lucky color to be invisible, right? It's a very threatening time. So that is also happening at the same time the United States is probably in its weakest fiscal position since certainly World War II, with debt to GDP at 122%. So it's a really tough time for, I think, the moral voice of the world. Certainly been the leader since World War II. It's a really difficult time.
Let's break this apart. I want to talk U.S. in just a moment, but to this existential risk that you talk about, you know, these nuclear powers, is there any way as an investor to even think about that beyond just the end? Meaning, do you say to yourself, I need to, dare I say, hedge myself against these risks, or do you say that these risks are just what they are, and so I have to keep going?
I think we've become inured to headline risk. If you think about the market's reaction to what happened over the weekend, it was a linear response, right? It was risk off, but it wasn't anything that possibly recognizes just how dangerous this could be. So. And I think that's because we've gotten exhausted with headline risk. It doesn't mean that we can't have a nonlinear reaction to markets down the road if something bad happens. So it doesn't mean that. It means that I think at this point in time, we're just probably incorrectly exhausted by
seeing this. This was pretty bad, though. Like, when you say something bad happens, what would that have to be? Something that happens domestically?
Well, I mean, if you think about, again, what happened, where this really gets bad is obviously if Iran and Israel get in direct conflict. That's when it really gets bad, because then you've got the ability to have kind of a First World War cascade when everyone gets involved. Obviously, the big question now is, was Hamas a proxy for Iran like Hezbollah is, or was it simply an ally? And there's big different responses that come from which one of those is ultimately determined by Israel. So, yeah, if from a personal standpoint, would I be investing in risk assets now in stocks until I saw what the resolution was with Israel and Iran? You know Israel's going to respond in some way, shape, or form. The determination of whether Iran was actually responsible is enormous, because, again, it has the possibility to really escalate into something terrible.